Hello traders out there in Traderland, my name's Dez here at Grok Trade. It's Thursday, March 29th, 2012. The markets just ended. We have the Dow in positive territory after a big bearish day today. The S&P closing at 0.16% in the red. Nasdaq doing a little worse, down 0.3%, about the same on the Russell small caps. So you still have both technology and small caps lagging what we're seeing the S&P and certainly the Dow at this moment. Banks down 0.7%. So the banks in large part lag the broader markets all day long. VIX down, believe it or not, even on the bearish day. Gold down, but silver up. Look at silver, up 0.6%. Crude oil down a whopping 2.24%. US dollar at break even. Let's take a look at what we're seeing in the technicals in the S&P. We had this rising wedge. The rising wedge, we had the pullback. We bounced after that pullback, after we had the hammer. Nice bounce. However, what we failed to do was touch this trend line. We touched it here. Touched it here, we missed it there. So it's a rising wedge that missed hitting a resistance area. So after a one day pop, we suffer a 3-day loss. All right. So if you just go back the last 10 days here, the majority of them have been down. So we do have a hammer today. We came down, found a little support at this swing low, bounced right back up, got a hammer at the EMAs. So that is very bullish. The problem is the context that we're getting it in with the rest of this price action. So we do have a higher swing high, but we have a lower swing high on the MACD centered oscillator. That is bearish. We have a rising wedge. Now we have closed below that lower trend line. That is bearish. So what we're seeing here is a rolling over effect. So you had this trend line going higher. Now you have this little guy doing this. So it's rolling over. It's flattening out. So with that being said, we have one of two things that could be happening here. This thing could be setting up to drop, or we're going to go into consolidation, which is very probable. The reason I say it's probable is because we had last two sessions long lower shadows. These long lower shadows means that is bullish bias going into the close. So with that being said, it may want to hang out up here in these upper levels. Still, nonetheless, we do have a bearish divergence on the histogram or on the MACD centered oscillator. If you look here at the Dow, the problem with the Dow is we have the makings of a double top. So we have a double top, but it could also be an ascending triangle, which is very bullish with this long lower shadow and this nice big hammer. The problem with this is we have support. Actually, I'm going to go back a little bit and show you where this originates from. But we have support here, so follow me up. Follow up. Nice support here, nice support here. We're on the wrong side of that support right now. If I were to bring in a line chart, let me show this to you. Nice support, support. We're just, we're right at this. See this? Right at it. Go back here to the candlestick here. So, it is really, really close from being below. If it closes below, that's going to be problematic for this, and it could start breaking down. So this is at this point of no return. If it starts to drop here, markets are in significant trouble, especially in the Dow. Now, if I go over here to the Nasdaq, take a look. We're in this nice uptrend, gang, and with this uptrend, we have this nice little pullback to the rising EMAs. Then we have this little hammer. So as far as technicals are concerned, we look fairly bullish. The problem with the technicals is we have this bearish divergence taking place, and this has been a monster bearish divergence. The longer these things last, the faster the correction can be. So the markets are under significant pressure right now. Now let's go to small caps. Let's go to Russell 2000. Russell 2000, we in the two big dark lines, huge rising wedge. You can see the two lines converging onto each other. And then we have a smaller rising wedge inside with the confirmation of a bearish divergence on the MACD. We have support, and here we actually closed below the support line. So small caps are in a lot of trouble. We did find support at the 20-day moving average, but we're finding resistance at the EMA. Instead of bouncing off of them, they're acting as resistance. So I'll be watching small caps in large part, because this could be the leader to the downside if we do decide to start to drop. This morning, the fourth quarter GDP did tick higher, and it ticked to 3.0%, which was expected at 3.0%. However, jobless claims did tick lower by roughly 5,000. So that's not overly great. So we're at 359,000. We did expect 350,000. So when I say it ticked lower, it actually ticked higher, or it ticked worse. And what we have going in gold right now. Gold is at 1660. Crude oil down just above $103 on crude per barrel. All right, always remember, never trade without having a mentor, and remember that capital preservation comes way before making a profit. Take care, very safe trading to you, and share us with a friend.